What's up, people? Welcome on the channel. My name is Clifford Mlauzi, and in today's video I want to show you how I trade, and I want to share with you my secret ingredient on how I end up, or how I find myself always in brews and taking very beautiful trades. So what I'm gonna do right now, I'll take you on the screens and I'll show you step by step. What you only need to do is to like this video and subscribe to my YouTube channel and watch this video to the end and hit the notification bell so that you can always get notified every time I drop content. Otherwise, let's get started. So every single day I open DXY chart so that I can actually look at the performance of the dollar. So what I normally do, I don't really go on a smaller time frame, but I go on a higher time frame, like a daily. The market has been creating highs and highs, so we can see that this is the this is the lowest low at the moment, and we're having another lowest low right there, and then we're having another lowest low right there, and this could be a potential lower low, right? This one. So after every low, the market turns and then starts going up. So let me just like use a Fibonacci and measure how much did the market come back to retrace. So we can actually see, like right here, the market retraced close to the 61%, and let's see next when the market also right here, how far did the market retrace? Right here, it's also the same thing. It actually passed the 50 but not touched the 61. And then next thing, let's also see how much the market has retraced here, from here all the way to here. Same things, guys. So you can actually see that the market is always retracing back, but it's not passing the 60% on all lows every time. So right now, this is simply telling us that right now this is the time the market is thinking of, or not thinking, but the market is about to push to the upside so that you can create a new high and then also come to retrace again and then continue going up. So what we can say right now is that the DXY is starting to get momentum to start pushing to the upside, and this is something that you guys are never gonna find out from just a random YouTube channel. This is information that you guys need to cherish and make good use of it. So you can actually see that the market is just about to start pushing to the upside. So what we're gonna do right now is to start looking for anything. We need to start looking for buys. So what we're gonna do is that we're just gonna go on a 4-hour time frame. Okay, like when we go back on a daily, we can actually see that the market has given us about 2 bullish candles already, this one and this one. Now this is the next bullish candle, so which means the market is likely to continue pushing to the upside. We need to expect the market to push up, right? Which means the market for the dollar index is going to be gaining momentum. So what does this tell us on the other pairs? What is the correlation? Why should we look at the DXY? So the reason why we look at the DXY is because the dollar index will actually tell us how strong or how weak the dollar is. So when we know how strong or how weak the dollar is, it actually gives us like a signal to say that, okay, if the dollar is now about to be gaining momentum, it means all pairs that are let's say XXX USD at the end, XXX USD at the end, it means they're gonna be going down. For example, we're gonna be looking at gold, GBPJPY, USDJPY. I mean, everything that is Shanshani USD, which means like US30, gold, GBPUSD, Euro USD, whatever, CHF USD, whatever USD, it's gonna be going down. I hope it makes sense. So for the pairs that I look at, when you see right here, I look at GBPJPY, NASDAQ, US30, gold, USDJPY, and GBPUSD. So right now we are looking at GBPUSD and NASDAQ and US30, which means, and also gold, which means these pairs are going to be going down. All right, so there are a number of factors that also affect these things, but this is like the strong indicator for us that tells us the direction of the market. So right now we're going to be selling these pairs because the dollar index is gaining momentum. So next thing that we're going to do is just to go on a 50-minute time frame, because we need to see what time should we enter. Like we just want to find out the confirmations on when can we go in or when can we go out. So what we're going to do is to do this, we can actually see that this is our lowest low right at the moment. Yes, I mean, if you want to spend time analyzing this this index, you want to spend time analyzing the other pairs. Why? Because you already know where the market is going. So this is like a market shift or break of structure, or I can say, yeah, change of market character or change of character. And we can see how liquidity has been grabbed right down there. Sponsored candles started from this area. That is why this area is holding price. Like you can see, price reacted, and then price came again, and then price came again, and then price came again. And now we're likely to see price coming again here, continuing up, but chances of that happening are very low. Why? Because this we're also seeing another candle that just also came and then grabbed liquidity on these lows, which is this one, right? So we'll look at this where the sponsored candle started from. This is our area, so we can say, yeah, this is our area. So we're likely to see prices from this area pushing to the upside, which means this is something that we should expect next. All right, so even when we use the trend lines, we're gonna have something like this, whereby the market touches once, twice, third time, whatever. Or since the market is down there, it's recommended to start from up here. We can just put it there and put it there, and then keep pushing to the upside. So this is like very easy stuff, guys. You don't have to struggle finding out where the market is going. What the most important thing is just go on a bigger time frame, and the bigger time frame will tell you where the market is going. So exactly right here. So right now we need to go on a smaller time frame. We need to identify some of the things that I teach in my private mentorship program. Is that you always need to wait for a confirmation. So a confirmation will always look like this. So in this case, like you can see, market just came in this area, whereby we started creating some liquidity right there, and liquidity was grabbed. Market pushed down, and as soon as the market pushed down, it went up, and then it also broke this high, which is the change of character. And as soon as it did that, the market went to deep for mitigation. And as the market is down for mitigation, always use your Fibonacci to come here and balance the market like that. And right now you can actually see that the market is in this area. Very soon we're going to be pushing to the upside. So that's like what we need to be looking forward for today. And we're going to put our orders on the 50% and expecting the market to push up. Now let's go in the charts and analyze together. So what I'm going to do right now is, I don't usually learn for trend lines, but I make sure that I understand my highs and my lows. So you can actually see these are my highs and these are my lowest low, but I'll not consider this most lowest low. I'm looking forward to see price moving here, coming here, and then all the way to the downside. So when I do this and I take it from here, I'm expecting the markets to be coming in these areas before they start pushing up again, right? Before they start like taking up for new highs. If you're looking for a broker that you would like to be trading with smaller capital, you can actually check out the link in the description below. I trade with EXNESS, and if you use the link in the description below, that's gonna be very good. So just don't bother like sign up with any other website, just use the link in the description below. If you want to trade with the broker that a prop firm that I use, you can also check it in the description below. I trade with Traders with Edge, and it's a very good prop firm, and I'm still also trading with the old prop firm FXY. They're both good. And yeah, otherwise let's continue watching this video. So next thing, what I'm gonna do, I'm actually just marking the lows, and right now apparently this is I'm gonna be using these areas because these are like my psychological areas, my key areas, my key levels, I should say. All right, and the next thing that I'm gonna do is to go on a 15-minute time frame. On a 15-minute time frame, I want to where the market is simply pushing. So as you can see, this is the recent high that was taken out, and the sponsored candles that took that one out are starting from here. That is why we saw the market coming in these areas for mitigation, and I'm going to consider that as an FVG. And apart from that, also saw the market coming to grab liquidity down here, and I'll just use this one. Okay, I'll just use these lows where I'm seeing the market is just like changing, breaking structure, pushing to the downside, where we're having the market shift. Yeah, no, it shouldn't be break of structure, but should be change of market character, where the market is now beginning to push down. And the next thing that we're going to do right now is we witnessed the market pushing to the upside, coming in these areas, and then started dropping down. So we're likely like to continue pushing to the downside as we go. And the next thing that we can see is that if we bring our trend line, you can actually see that the market, might come also here in these areas and then continue going down. But not today, or not now, or the market might just like continue going down. So you can actually also see that we just come from an impulse, and then after the impulse, we're now in a correction, and after this correction, we're likely to go into another impulse down here. So those are some of the things that you need to be aware of on the US30 trade. So you can actually see where the market is on the DXY right now. On the DXY, if you noticed, you noticed that the market was on some sort of like on its latest to be pushing to the upside. So you can actually see right here, the same latest, we're also on the latest, but we're pushing to the downside. That's how these things work, which means we're looking forward to see the market dropping all the way down to those areas. So we just have to be patient, and we just have to be confident and know exactly what we're doing. So in this scenario, what we are gonna do is I'll just go on a 5-minute time frame, and then I'll zoom out so that I can also explain the graphs on a smaller time frame. So in this scenario, what you can see is that you saw market in these areas where the market just pushed to the upside to take away the liquidity that was listing above there, like that, and then the liquidity was taken out. And the next thing is that the market now comes in that area. So which means I entered my trade exactly right here, and we're likely to witness the market pushing to the downside with that move. And even if it comes like 3:30, I strongly believe that now the market is gonna break this low, and we're gonna go all the way down to this low. That's my take for this trade and for today. And this is just me analyzing USD. I mean, me analyzing one pair. So I'm gonna send the signal to my group. Okay, so we're apparently in this area, our supply area or our supply zone, whereby we're looking forward to see the market dropping. Because the reason why I'm emphasizing that we are selling is because the DXY is buying, right? So we can't change our perception towards that. So how I've analyzed the USD is just the same as how I would also analyze this one, because I'm trying to not make this video very long, but you can actually just like see how I look at the market, how I lay out my things and everything. So this is exactly the thing. So you can actually see that something that I've explained, whereby we're having an impulse, and then we're having a collection, and then after this collection, the market is likely to push to the downside. So we're likely to continue dropping. And if I would also explain these things, I would say you're having this liquidity that has just been cleared out, the buy side liquidity, and then the market is likely to continue dropping. So if you take trades based on the DXY, you're gonna be more confident or more flexible, because you know like the DXY never goes wrong. You never go wrong following the DXY. But if you just like make your decisions based on what you're seeing on that particular pair, it's gonna be crazy. So otherwise, I thank you guys for watching this video. I thank you for being with me through the end. If you'd like to sign up with the broker that I use, the link in the description below. And if you'd like to trade with or get funded with the platform that I use, there is also a link in the description below, where that is Traders with Edge, which is one of the best, and I give it a 5-star rating. Otherwise, guys, see you in the next video, and like and subscribe.